Ladies and gentlemen, good day and welcome to the Q3 FY2024 earnings conference call of Hindware Home Innovation Limited, hosted by Nuvama Wealth. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. You are requested to refer to the mention in this regards in the earnings presentation. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Nikhil Shetty from Nuvama Wealth. Thank you, and over to you, Mr. Shetty.
Thank you, Michelle. Good afternoon, everyone. On behalf of Nuvama Wealth, we are delighted to host the senior management of Hindware Home Innovation. From the management side, we have Mr. Sudhanshu Pokhriyal, CEO of Bath Business, Mr. Rajesh Pannu, CEO of Pipe Business, Mr. Salil Kapoor, CEO of Hindware Home Innovation Limited, Mr. Sandeep Sikka, the Group CFO, and Mr. Naveen Malik, CFO of Hindware Home Innovation Limited. We will start the call with the opening remarks from the management. Then we'll move to the Q&A session. Thank you, and over to you, sir.
Good afternoon, ladies and gentlemen, and welcome to Hindware Home Innovation Limited Quarter 3 and 9 months FY24 earnings call. I would like to provide a brief overview of our company performance for the quarter, post which the business CEOs will share the key highlights of their respective businesses. Despite the challenging macro environment, our performance for the quarter and 9 months has been stable, while demand sentiment across categories and regions has been muted. The resilience of our business model and the strength of our brands have enabled us to continue delivering value. We are confident that as the market improves, our performance will further strengthen. Hindware Home Innovation achieved a consolidated revenue of rupees 693 crore with consolidated EBITDA of rupees 61.3 crore in Quarter 3 FY24. For the 9 months ended December 23, our consolidated revenue reached 2,067 crore, while consolidated EBITDA stood at rupees 210 crore. Our strategy for all businesses is to continue building our brands, expanding our reach, enhancing our operating and supply chain efficiencies, optimizing working capital, and augmenting margins. I would like to call Mr. Sudhanshu Pokhriyal to take you through the Bath business. Over to you, Sudhanshu.
Thank you, Naveen. Good afternoon, everyone. As you know, demand sentiment remained subdued due to challenges rising out of muted demand, inflation, and interest rates. Our Quarter 3 revenues amounted to about 402 crores, reaching 1,160 crores for 9 months. Despite market challenges, profitability and margin performance remained resilient, with EBITDA at about 55 crores and EBITDA margin of 13.6% for Quarter 3 FY24. Margins for the quarter could have been higher, but for the additional marketing spend during the quarter, I'll talk about it a bit later in my commentary. Customer response to our new offering continues to remain encouraging, as reflected in the increasing share of new products, which contribute to 24% in our sales in the first 9 months of FY24. We're actively reducing our dependence on imports, focusing on manufacturing high-value items at our plants to boost margins and manage inventory levels. Working capital management remains a priority for us. We continue to penetrate new markets, recognize untapped potential in Tier 3, Tier 4 cities. We're actively expanding our distribution network to broaden our reach. Simultaneously, we're investing in strengthening our presence in Tier 1 and Tier 2 cities by opening more brand stores. Our commitment to enhancing brand visibility remains steadfast. Like I mentioned earlier, we've invested in marketing and building on our cricket collaboration. We advertised throughout all 48 matches in World Cup during Quarter 3 with an overall expenditure of 7 crores plus. working capital efficiency has also shown improvement with a decrease from 122 days in Q3 FY23 to 117 days in Q3 FY24. Our endeavor continues to be to grow 1.25 times of the market in FY25. Our strategic initiative reflects our commitment to growth, innovation, and delivering value to customers. With diversified offerings, a strong brand, and aggressive expansion plan, we aim for profitable growth in the current environment. I'd like to now hand over the call to Mr. Rajesh Pajnu to take you all through plastic pipes and fitting business. Over to you, Rajesh.
Thank you, Sudhanshu. Good afternoon, everyone, and thank you for joining us. Despite challenges such as sluggish demand and fluctuating raw material prices on a downward slide, our quarterly revenue reached at rupees 174 crores, with rupees 531 crores in 9 months FY24. Our Q3 EBITDA stood at rupees 13 crores with a margin of 7.7% and rupees 45 crores in 9 months with a margin at 8.5%. Margin pressure during the quarter are attributed to reduced realizations. We are actively exploring measures to reduce our current working capital time frame, ensuring greater efficiency and agility in our operations. With our effective inventory management, maintains control and stability. Our market presence remains strong, with CPVC pipes and fittings contributing over 40% to our revenue. We actively engage with plumbing consultants, plumbers, and conduct training sessions for our channel partners to strengthen our market presence. Currently, our network includes over 300 active distributors and approximately 30,000 retailers. The construction of our new manufacturing plant in Roorkee, Uttarakhand is underway, and we anticipate its operational launch in December FY25, marking a significant milestone in our journey. We are diversifying our product portfolio with the introduction of high-value added items, commencing with foam core and underground drainage in Q1 FY25. Furthermore, we plan to manufacture double-wall corrugated pipes and fittings, and also fire sprinkler systems, which will go till Q3 FY25. In conclusion, TrueFlow remains committed to market expansion, enhanced brand awareness, and pursuing profitable growth. I would now like to hand over the call to Mr. Salil Kapoor to take you through consumer appliances and retail businesses. Over to you, Salil.
Thank you, Rajesh. Good afternoon, everyone, and thank you for joining us for our Q3 and 9-month FY24 earning call. Consumer businesses have been facing headwinds since at least last 2 quarters. And in midst of this, our consumer appliance business revenue stood at about 112 crores with 9-month revenue reaching rupees 314 crores. Our growth was subdued due to muted consumer demand and inflationary concerns. The kitchen appliance business remains resilient and continues to grow. Our chimneys continue the dominance on both the online platforms. We are number 1 on Flipkart and number 3, but reducing the gap with number 2 on Amazon. We are actively expanding our portfolio in kitchen appliances, adding more products, doubling down on the overall portfolio where we are doing well, and capitalizing on our strengths in this segment. And concurrently also working to streamline the product portfolio by focusing on select categories with the goal of increasing margins. We have expanded our presence with the introduction of new kitchen galleries nationwide and have also boosted our distribution network to capture increasing demand. The setting up of several residential apartments is also an opportunity that we are looking at more from the B2B perspective. Although post-festive season trade channel experienced destocking, indicating weak consumer sentiment, we anticipate a recovery in the premium residential segment over the year. In conclusion, we are using this macro consumer slowdown trying to put few things in order. There are 2 themes that we are currently working on. The first one is on rationalization of the portfolio, where we are doubling down on the kitchen part where we are doing well. We are also exiting some non-performing and low-performing categories so that we can focus the resources on the areas that we are doing well. And the second theme is to put the business hygiene in place where cost, both product as well as operational, is under focus. We are putting some corrections there and also improving the efficiency on the operational front. that concludes the opening remarks, and I would like to ask the moderator to open the floor for question and answer session. Thank you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on their touchtone phone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. You may press star and 1 to ask questions. The first question is from the line of Praveen Sahai from Prabhudas Lilladher. Please go ahead.
Thank you for taking my question, sir. Sir, first question is related to the bathware segment. And in the bathware segment, what we observed that the peers or even the smaller peers who has ventured out in this business were doing far better in terms of the growth. And looking at the 9-month numbers, their growth rate is better than ours. So is that somewhere in the market share shift we are seeing in the bathware segment?
So this is Sudhanshu, and basically we have seen in the last 3-4 years just about every tile company has got into bathware in a notional way, and to the best of our understanding, none of them have achieved any significant revenue as of now. The way the market is structured, when they already have some network, and when you place your first product into the market, the primary dispatches happen and revenue gets booked in financial books. We have seen many companies after doing initial revenues, and when you do initial revenues, you literally do it on zero volume, so your growth looks very, very high. But not many companies have been able to follow up on similar growth in future. So to answer your question, yes, the competition has intensified across sanitary ware faucet business because existing tile brands have come into this business. However, this business, unlike we don't believe this business to be a building material business. We believe this business to be a consumer business, wherein brands are very, very important, and basis the brand, consumer buys the product. So I'm sure that we will see, consumers coming to the bigger brands over a long-term period. So to answer your question, yes, there is competition. We can't stop competition from happening. But yes, have they made a dent? Yes, initially they would have. But we don't believe in a larger scheme of things, with larger competition in mind, we have lost any share. We have actually performed better than all the other listed peers as well. If you look at their the last quarter results, even if you can be able to make out what I'm saying. And over the last 10 to 12 quarters, the answers are evident.
Okay, got it. And if any color on the segment, like a 5.5% of a growth in the bathware, how is sanitary ware, how is the faucet has done?
Yeah, so for us, both our segments are positive, and of course our faucetware business is actually doing far better. It's a low single digit for sanitary ware and double digit for faucets.
Okay, so double digit for this quarter and even for a 9-month?
Yeah. This is static. What I'm saying is for the full year only. And in my view, we've seen some, like a muted demand as, we've seen in the entire category. But if you look at the real estate sector goes through a cycle. What we saw last 2 years is when we saw huge demand for this business. If you recall, last 2 years, even our business grew by nearly 39% or nearly 30% in the previous 2 years. And this year, we've seen a muted demand because of the real estate cycle. What we're seeing is an early stage real estate cycle right now, and for which demand for our products will come in the next financial year. So I personally believe this muted demand will start looking at very, positive as we enter the next year when construction gets into a cycle where sanitary and faucets gets installed in construction.
Good. Sir, next question is related to the pipe business. As I see, our large peers has delivered a very good growth of a double digit, whereas our number is in the decline on the YOY side. And similarly, we had also seen that the EBITDA per kg number has also significantly down for a quarter. So what's the way forward? Like we are expected to, come in the positive in the coming year. How is the volume is shaping up, and why we are get impacted versus large peers more?
Okay. Hi, this is Rajesh here. There are two parts in your question. One is that what you said is it's only almost everybody has reported their balance sheets. Only two companies, if you have gone through their transcripts, two companies have reported volume growth. Their prices are at all-time low. So nobody talks about value. But volume, if you see what they have indicated, there is all this volume growth, whichever has come, is from new product categories which have been introduced last 3 to 4 years only. So the categories like underground drainage, double wall corrugated, fire sprinklers, silent pipe systems, and also the volumes have come on a very higher side from government sales. That is huge Jal Jeevan Mission project which is going on, which is Modi's dream, Har Ghar Jal. And that's all HDP. Let me tell you, we are not into that category. We are just 4 years old into the market. This is our 5th year of operation. So when we entered into this market, we have come with a plumbing category. And now we will be introducing slowly. We are working on these. This year we will be coming up in 3 of the categories out of these 4 categories. So all these categories have shown growth in their volumes where we are not participants. Otherwise, all other people, if you see, they have grown only. That is one. Second is, once we are there now, we definitely have a vision that the next quarter, this quarter, and then the next year, we will have a volume growth. If you see our YTD growth, that is almost around more than 11%, which is almost similar to all these players. But yes, definitely, as far as Q3 is concerned, we are degrown by 4% of volume. And we look forward positively to next year where we will be marginally very high as far as our volume growth is concerned.
Okay. Any color on the EBITDA per kg? Because there we had seen a significant correction.
What happens in this industry is that directly if the prices go up, that is the trend. You must be knowing the prices go upwards. Once the resin prices go down, the prices come down. So when we were at last year, exactly the same position, that is ending of quarter 3, the raw material prices were 91 rupees. Presently it is 76 rupees. That is down by 15%. Once this happens, your average metric ton realization comes down. So that is the pressure on the net realization. We are hopeful that things will be positive in future and then the realization will come up.
Okay, so it's largely to do with the realization which has come down.
Absolutely, sir. Absolutely.
Okay, got it. And the last questions are related to the in the press release or in the presentation mentioned about the kitchen fitting business. So can you give some color on that? What is the industry size, competition, and where we are in that segment?
We are exploring that the overall portfolio in the kitchen fitting segment. The market size is definitely around 7,000 to 8,000 crores. There are multiple partners, and our existing partners are already a well-established brand internationally. Though one of the partners where we had tied up was acquired by a market leader currently, but now the clarity is already in place, and we will be going ahead with that business in India. Our plans are to increase the portfolio as it's a good margin business and also fits in our overall kitchen strategy where we are doing well.
Currently, we are not generating any revenue in this segment.
We are currently generating revenue, though not at a large scale, but we have already tested the waters and it goes well with the brand because of the kitchen and other fittings, and there is a market and there is also synergy within the channels. Our existing team can take care of it. So therefore, we would like to scale it up going forward.
Great, sir. Thank you and all the best.
Thank you. We'll take the next question from the line of Utkarsh Nopani from BOB Capital. Please go ahead.
Yeah, hi. Good morning, sir. Sir, my first question is on the plastic pipe segment. So as you mentioned that we are currently expanding our product portfolio range and planning to launch few products in the coming June quarter and December quarter. So wanted a sense from you, going forward, do we expect to grow our pipe volume at a better pace than the leading players because our base is pretty low? Or do we expect to grow at par or at a lower rate going forward?
Yeah, I'll answer this. What has happened in the past when the prices were stabilized, if you have seen last 4 years, in fact, percentage-wise, when the rates were at par, worldwide rates of PVC resin, we became the largest growing company in terms of percentage in this segment, which we still are. But at the moment, now the pressures come on the prices. The prices are almost around 15% lower than last Q3. What I said earlier was, definitely we will grow. We are looking forward because, as I said, this year itself, the first quarter, our underground drainage machines are already, they have come. There will be trials. We will apply for BIS licenses. And I think in Q1, we will be definitely able to sell these products. And the other two categories, that is double wall corrugated, the machines have been already ordered. We will be doing it, I think, almost around Q3 of this year, we will be installing these machines. And we will have a direct commercial production. And also fire sprinkler systems, which are now gaining a lot of ground. If you have seen recently that the normal conversion from conventional GI piping systems in fire has now converting to CPVC fire piping sprinklers. And the departments are also giving approval for it. So by this quarter 3 of this next year, we will be entering into this. So there will be definitely an incremental growth for these products, which we are not there into. We definitely assume a positive assurance of around 15% or more in the next financial year of the volume growth.
Okay. Sir, but on relative basis, wanted a sense from you. Say, whatever may be the market condition, are we confident of clocking better volume growth than the leading players, or we feel that because our base has become pretty high, it would be difficult to grow at a better rate?
If we are talking, see, I'll tell you, we need to clarify this once, that the piping sector is a very huge sector, sir. There are almost around 11 categories of different products where people are operating. Say, if you talk about Supreme and Extra, they are into all the 11 categories. We were there into 4 categories. And we will be entering into 3 categories this year. So we will be into 7 categories. When we talk the comparison about apples to apples, definitely we will be going at a very high speed than them, very high pace with them, which we have been doing in the past. But if it comes to the other categories, as I said, this Jal Jeevan Mission, that is the HDP entire area, and as we all know that before elections, this is going to get completed. I don't think this will be a big category next year after first quarter. So in totality, if you see, we will definitely be growing. I am giving a positive guideline of this. But when we compare apples to apples.
Okay. Sir, my second question is on the retail segment. I believe 2 quarters back we mentioned that retail is not a core focus area for us and we are evaluating alternative options. So have we arrived at some decision about it?
So we had a board meeting yesterday, and in principle, board has approved that we should aggressively work on all the options relating to this, whether it is an exit or sale. So I think you have to bear with us for maybe another quarter or so before we finally take it to the board and get it have a final conclusion on this.
Okay. And sir, lastly on the capex part, can you give the guidance? What is our capex guidance for FY24 and 25, and how much amount we are planning to spend on our Uttarakhand unit for our pipe plant?
Okay. It's like till now in Uttarakhand plant, since we have started late because we lost 2 months in heavy excessive rain, we have just spent only 14 crores till now in this current financial year. Next year we intend to spend 100 crore of investment in Uttarakhand because we will be commercially operating this plant by end of December in next year. So we will be operating with a higher capacity of around 12,500 metric tons, which will again add up to the sale. At the moment, what is happening is pipes exclusively, the agricultural or FWR pipes, we are not able to sell in the north. We are only able to sell the other products because we don't have a manufacturing facility. And as such, the freight part in pipes is so high, you cannot transport pipes at a larger volume to these places. So once this plant is also operational, we definitely, I come back to your question, we definitely have a chance to score better than our competitors.
Okay. And sir, our total CapEx guidance for 24 and 25?
Yeah, please go ahead. Please go ahead.
Hello.
Yeah, please go ahead.
Yeah, sir, I was looking for the total CapEx guidance for FY24 and 25, sir. That was my last question.
So, one big CapEx is relating to the pipe plant which is being set up in the Roorkee. And if we net it off, the total CapEx should be in, and rest of the major CapEx is towards, establishment of market, retail outlets. So other than the pipes plant expansion which is there, I think we should do around 60-70 crores in terms of the BPD part, the bathware products part.
Okay, thanks a lot, sir.
Thank you. The next question is from the line of Nikhil Gara from Abacus AMC. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. So I just have a couple of questions. Firstly, on the sanitary ware and faucet part, or just Hindware overall, can you give us the A&P spends number for this particular quarter and what it was year over year and last quarter?
So you want exact sales number?
A&P spends, yeah. Advertisements and promotion spends.
Advertising spends. Advertising. Okay. Give us a minute. Yeah, so we've spent around 25 odd crores this quarter, which is 9 to 10 crores higher than on an average what we do. Right, that's how it is.
So was it 15 crores the same period last year, same quarter last year?
I'm talking ballpark numbers here. Yeah, you're absolutely right. And this is primarily on account of the fact that we had two big events in the last quarter, especially relating to the World Cup. And Sudhanshu, I would request that if you can talk about it. So we, like we said, we got an opportunity to be, to make our brand visible around in 48 matches in one of the biggest opportunity of, impact property of the quarter. And we took that opportunity. We were available across 48 matches in a very, very widely seen World Cup. Nearly 4.5-5 crores people saw our ad for nearly 25-30 times in a match for 48 matches. So that's where we spend that money. But yeah, and I give you the number as well.
So if we sort of adjust for this, the extra 10-12 crore spend, then we are saying the margins are broadly in line with the run rate that we have seen for the past couple of quarters, right? There is no change in product mix is what I'm trying to say. Any adverse product?
Absolutely, Nikhil. There is absolutely no issue, in fact. And I would also like to bring to your notice that for the 9-month period, our EBITDA margins have improved by 200 basis points from 13.4 to 15.4%. If you remember, our guidance in the previous calls have always been about 100 basis points improvement. But on a 9-month basis, even after doing this extra spend in this quarter, we are 200 basis points higher. So there is no adverse product mix. There is no margin pressure of any nature. In fact, we are on track for our localization initiative as well, which is bound to give us further gains as we go forward. We've been mentioning in every previous guidance calls as well.
Safe to assume that the 16.5% run rate should continue from the coming quarters for Hindware.
16%, yes. I won't go 16.5, but 16 for sure, yes. Plus.
Okay, fair enough. Secondly, sir, on the pipes business, while sir explained about the impact on volumes, is it only the realizations have fallen just purely because of the fall in PVC prices, or there is also some product mix angle as well? And just in that, the margin part, were there any inventory losses as well in this quarter?
No, as I said earlier also, it is purely the resin rate as on December 31st has fallen by 15%, that is from 91 to 76 rupees. And realization PVC has gone down from 147 rupees to 125 rupees, which is exactly 15%, the same. There's no change. As far as yes, last year the industry had huge inventory losses, if you recollect. And we took a cue from that. We have controlled our inventories this year. So I can tell you that in this quarter only, we have just an inventory loss of approximately 1.5 CR. That's all, which was very, very huge last year.
Okay. So, sir, do we expect, we did commendable margins in the last quarter, around 10-11%. If we assume this sort of, realization run rate to continue, do you think we'll be going back to the double-digit margins, or we also need a volume spike up to go to those levels?
You're talking about pipes, Nikhilji?
Yes.
Yeah. Yes, definitely. See, we are expecting that in maybe around by March or something, we cannot give the guidelines, but definitely there will be a correction in the prices. It has to be there. So once that happens, automatically your per metric ton realization goes up. So that is one part. So that will definitely improve this. At the same time, when we are talking of we'll enter into different categories next year, there will be an incremental growth which will come from that place. And all those categories, since they are new into the Indian market, if you understand, because there will be only 4 or 5 players who will be manufacturing, in fact, 3 players only who are manufacturing those categories. So the GP margin of those products is on a higher side. We will definitely realize a better EBITDA in future.
Got it. So my next question is on the consumer part of the business. When do we see this business, once again going to break-even levels at EBITDA? We have seen a significant amount of time where the growth has also not come, and also the margins have sort of dwindled away. I understand the overall demand environment, but can you give some estimates by when can we see, break-even coming in this business, and what kind of growth do we expect in this business in the next couple of years?
As said earlier, we are working on some basics, rationalization of portfolio and also correcting some things on the cost front, both operational and product side. These initiatives should lead to our getting on the positive side of the EBITDA front in a couple of quarters. As far as growth is concerned, we want to focus and double down on the kitchen area where we are doing well, both on online and offline now, and we want to expand it further. And this should give us good growth going forward, and we will reduce our dependence and also exit certain categories which have not been doing well. That might have a temporary effect on the growth, but in the long run, focusing on the kitchen is the right strategy that we want to follow, and that is how we have planned.
So if I understand what you mentioned, so in next couple of quarters we see EBITDA break-even, and the product rationalization should also get over in this next couple of quarters, or it's going to be an
Yes.
Okay.
It should get over within the next couple of quarters. Thank you.
Okay. So just one last question, especially for Sandeep ji. Sir, when we look at now the 9-month, net debt numbers, we are now closing 1,000 crores. And, we were planning to bring this debt levels down. Definitely it's gone the other way. So, any realistic number, in terms of when do we see this debt levels or any, sizable correction in this debt numbers? Because even on the working capital part as well, we are not seeing any major improvement across any category.
So basically, if you see, we had given a sort of a statement when at the start of the year that we should be able to run off, the debt by about 100 crores with the profits which we are earning. So the whole market momentum has not moved the way we have planned. Although the numbers which we are there, the growth numbers are muted, but in terms of the EBITDA margin protection, I think we have been able to demonstrate that on the bathware side. So I think give us another 2 quarters, we should be able to demonstrate of what we talked about, because there is no other exit of the money. So whatever is Hindware earning actually is being deployed towards reduction of the debt only. So what I think investors should bear with us for another quarter or so. Once the market momentum starts doing, the inventory liquidation also starts happening fast. The whole momentum come into the picture. Definitely there has been some increase in the debt on account of the incremental capex which is there relating to the pipes. Because it's very critical. Rajesh has already spoken about it, that pipe business, we are not looking at, what we are in the pipe business today. We are looking at a very aggressive pipe business, doing almost 2,000 crore plus in next 5 years, for which we will require some sort of an investment, because it's not a business wherein outsourcing can happen. So Rajesh has spoken about, entering into newer categories, nearby categories around the core product. So we feel, give us 1 or 2 quarters, I think some level of debt should come down. And but most of the debt which we are now contracting is for a long-term growth. Had we not taken a pipe, Roorkee plant, then that quantum of money would have definitely come down also.
So I understand, sir, but then at least the working capital is something which...
Yes, I think for that only I'm saying, once the whole market momentum, because some of the inventories are contracted in anticipation of a growth. So we were expecting, Q3 to be good, because generally it is a season when everything, demand picks up. Q4 are showing some good signs, and we feel, I think, Q1, Q2, because we have seen historically that whenever you have a muted period, after which, you get a good growth, because some of the investments which, ordinary consumers have not made, then all of a sudden it starts increasing. So we are bullish on the whole stuff, and forget about all this 1 or 2 quarters which has, wherein we have this muted growth. We are fairly bullish on the long-term growth.
Okay, sir. Thank you and all the best.
Thank you. We'll take the next question from the line of Anish Jindal from Dolat Capital. Please go ahead.
Hello. Am I audible?
Yes, sir.
Hello.
Sir, may we request you to use your handset, please?
Is it better now?
Yes, sir. Please continue.
Yeah. So my question is for the tiles division. Like, what is the price of natural gas sourced from Gujarat Gas at Mobi?
So we couldn't hear your question properly. You think where are the tiles sourced from?
What is the natural gas price you're paying for gas in Morbi?
Can you repeat your question, please?
Sorry, it was not audible. Could you repeat it?
Sir, may we request you to repeat your question, Mr. Jindal? We were not able to hear you clearly.
I was asking at what price does Hindware source Gujarat Gas natural gas for its Mobi plant?
So we procure tiles from Morbi as tiles. We do not have a plant in Morbi right now. So I won't be able to tell you exact pricing of natural gas from Morbi.
Okay. Thank you.
Thank you. The next question is from the line of Darshil Zaveri from Crown Capital. Please go ahead.
Hi, good afternoon. Thank you for taking my question.
Mr. Zaveri, your audio is not clear, sir. May we request you to use your handset, please?
Yeah, just give me a second.
Yeah.
Is the audio better?
This is better, sir. Thank you.
Yeah, hi. Thank you so much for taking my question, sir. Just wanted to ask, in our hardware segment, if we see from 9 months we can't hear you. Hello?
Sir, your voice is breaking actually.
Is it better right now?
Please try.
Yeah, hi. So I was just asking that in our bathware segment, you see
I'm sorry, sir. Would you mind if I ask you to, rejoin the queue? Because
I'll rejoin this.
Yeah. Thank you, sir. The next question is from the line of Chirag Fialoke from Ratnatraya Capital. Please go ahead.
Questions. One, on the, I understand the guidance that the retail business you are planning to wind down, but in this 9 months, that business has sort of seen a lot more investments, it seems like, at least on the P&L side than the last year. Last year we had made a cumulative 1 crore loss. This already we have taken a 9 crore loss in that. Is there
Excuse me, sir, on the management's line, I would request you to kindly mute your lines as there is a follow-up on the line, sir. Yes.
So I'll just mute it.
Thank you, sir.
Should I repeat, or was it clear, sir? The retail business, the loss that we've had in the...
Please repeat your question, sir.
Sir, my first question is on the retail business. I understand that the guidance is that we are trying to sort of, come to a conclusion on that business. But for the first 3 quarters, we've cumulatively had a loss of 9 crores on that side, whereas the last whole year was just, I think, 1 crore or odd. So I just wanted to understand, are we trying something there, which is why we are trying to sort of increase the investments on the OPEX side, or can you just give us a little bit more color there? How much more do we expect to sort of lose on that business this year?
The overall sales have come down. We haven't expanded the franchisee network. We were since the fixed costs have been always there and there was no growth, there has been a negative impact on the bottom line. But as we said now that we've already got the clearance and we will be moving ahead in that direction.
Understood. So it was just fixed costs and the revenue going down. That's all we see. That's the only impact. There's nothing new that we are trying there.
Yeah. There's nothing new.
Okay, understood. My second question is on the sanitary ware component of the building products division. Sequentially, there has been a little bit of a margin compression there also. Is that largely attributable to the incremental advertising cost, or is there anything else? Not on the pipes, just on the sanitary ware.
Yeah. So, like I answered in the previous question, yes, that's purely on account of the advertising spend which we did. We shared the numbers. We nearly have nearly 200 basis point impact because of incremental spend on advertising.
And a lot of that can be just attributed to only sanitary ware. Is that because you'll obviously sort of bifurcate those costs across divisions, but for sanitary ware itself, that the component was almost 200 plus basis points?
Yes, it is. We're talking about sanitary faucet and tiles business combined together. That's right. What we call BPD. The BPD business, yes, that's purely on account of BPD business. Yeah.
But not including the pipes, because the pipes have sort of another impact, right? I'm just
not including the pipes. Not including the pipes.
Understood. Thank you, sir. Thank you so much.
Yeah.
Thank you. The next question is from the line of Rusmik Oza from 9 Rays Equi Research. Please go ahead.
Yeah, thanks for the opportunity. So my question was a little on the broader thing, because in the first 9 months, on a consolidated basis, we have done a PBT of 91 crores. On a consolidated basis, we have done 91 crores PBT in the bathware business, but overall consolidated PBT is 30 crores. That means we're losing some 61 crores in the other businesses. So my question was, we had around 32 crore loss in the consumer appliance business also in the 9 months. So any internal guidance or aim you have, what kind of ideal EBITDA margins and net margins you are aiming for in the one pipe business and two in the consumer appliance business? Because as a shareholder, if I look at it on a 2,000 crore revenue, our net margin is only 1.5%. So how do we move up this goal of EBITDA margin and net margin going forward? This is my concern and question.
So basically, first let me answer on the pipe side. So there are a number of initiatives which are on the pipe. the fixed cost structure for pipe is still high, so the pipes team is working on rationalization of certain costs. And as the volume builds up, certain costs relating to the production will come down, and also relating to, the fixed cost of the business teams, like the manpower cost, will also get rationalized over a period of time. So there, we have already given, a double-digit 10 to 12% EBITDA, coming through in next 18-24 months with all the investments which we are doing. On the consumer side, I feel another 2 or 3 quarters will be required in terms of rationalizing the whole stuff, and we should be back to the market the way we were around a year and a half back. Right now, this business is facing an extreme headwind, not only for us, but when you see the competitors and the peers also, a similar sort of, the numbers are coming through there also. But good part is that we have a core kitchen business today, which is now in the focus area, and we are trying to create and rationalize the strategy. Here also, given the fact that we are in this business for almost 8 years now, and we are charting the path that in next 3 quarters or so we should make it a profitable business.
So just a follow up on the same question, sir. So assuming you go to double-digit 10-12% EBITDA margin, the pipes, rationalize your consumer appliances business and try and improvise over there, and as you all are taking initiatives to reduce the losses on the retail side, any guidance you can give maybe in a steady state FY25 if things are still normalized, then what kind of consolidated EBITDA margins and net margins you can look for or aim for going forward?
So generally we avoid giving a short-term a trend, but historically we have given those long-term trends. So basically if you see on a combined basis, both the entities together over next 24 months, we should be in a range of around 13 to 14% combined businesses together.
Okay. And obviously you said about the net debt also, but maybe on a 24 months, if you can just similarly give us a guidance at what kind of net debt are you comfortable actually with going forward?
So with all the margins which we are earning, other than the capexes which we have announced, everything goes for the debt reduction. So I think now from your side, we have built a robust business model. I think we have the first mover advantage also in the market, like what we started doing around 5-6 years back. The rest of the players are now experimenting in the market in terms of expanding the horizons of the brand. But I think we have the first mover advantage, and we have demonstrated that. So we feel that we should be able to continue our growth trajectory somewhere in range of 15 to 17%. And EBITDA margin expansion I have given, so I think you need to drive those numbers. And what I'm talking is not immediate quarters, but I'm talking a trajectory of, say, 2 to 3 years CAGR.
Okay. And my last question, sir, cumulatively till date, what kind of investments we have done in the pipes, plastic pipes and fitting business till date? And going forward, what kind of further investments? I think Uttarakhand plant is there. If you can give us a little bit of, to cumulative what kind of in the next 24 months, by end of next 24 months, what will be our total investments in the pipe business? And will that drive that 2,000 crore, maybe not 2,000, maybe what kind of revenue potential can pipe business give by the next 24 months?
At our Hyderabad plant, Rajesh, we would have spent around almost 350 crores.
This financial year we have spent almost around 14 crores on our capex and 34 crores in Hyderabad and 14 crores in Roorkee.
No,
and we'll be spending
capex done, total investment in pipes
in this financial year, and next year we are planning to spend around 100 crores in Uttarakhand, that is Roorkee plant, wherein we will be getting an additional capacity of approximately 13,000 metric tons.
So, Rajesh, your question was, what is the total investment in pipes at Hyderabad?
Till now.
Yes, so I wanted to understand.
You are talking about the cumulative, I didn't hear your question. Cumulative.
No, so I wanted to understand till date in the last 5 years, what is the cumulative investments you have put into the pipes?
340 crores. It's 340 crores.
Okay.
Right.
So when we do the crore of pipes business, I think this will require it's not only linked to Hyderabad plant and the plant in the Roorkee. We may have to entail further smaller plants for the pipes, in the west or in the east going forward. So which the board has not approved today, but this is a broader plan that once the whole thing gets out, so we are going to, invest into so that we have a pan-India pipe fittings we can continue from the Hyderabad plant.
Yeah. And a small clarification, sir. You had mentioned in between, that you want to aim for the 2,000 crore plus revenue in pipes business. By when can we achieve this figure of 2,000 crores, sir?
This is a plan over next 5 years.
Next 5 years? Okay. Thank you, sir. That's it from my side.
Thank you. The next question is from the line of Tushar Raghatate from Kamaya Kya Wealth Management. Please go ahead.
Yeah. Good afternoon, sir. Thank you for the opportunity. So on the investor presentation, you mentioned that in consumer appliance business, like we have 180 exclusive brand stores. So in which region of India is that?
We are spread all over the country with more concentration in north and east, moderate in west, and a little lower in south. But we are across, and we are also focusing on the larger cities within this during this expansion, because we feel that the growth is going to come from select clusters all over the country, considering there has been a significant urbanization which is already underway and will also be a force that will drive the businesses in coming years. Keeping all that background in mind, we are planning our future growth of galleries, which further strengthen our visibility as well as retail presence of the kitchen business, which is our core engine. So we will be doing this more in the cities and in Tier 2. And as I said, current presence is more in north and east, moderate in west, and lower in south. I hope I've answered your question.
Fair enough. Sir, in terms of percentage contribution from Tier 2 and Tier 1, what would be that?
Sorry, I didn't get your question.
Sale of consumer from Tier 2 and Tier 1.
Sorry, could you repeat the question, please?
So I just wanted to know, what would be the percentage contribution in terms of Tier 1, Tier 2, Tier 3 cities?
Percentage of sales?
Yeah.
It is much higher from Tier 1, around 40%, and around 30% from Tier 2 and rest from Tier 3. 40-45% from Tier 1, 30-35% from Tier 2, and the rest from Tier 3.
And so your online and offline mix would be?
Depends on businesses. In kitchen, we are about 25 to 27% online, and in our home appliances business, which is air coolers, we are almost about 45 to 50%.
Sir, your kitchen appliances business would contribute what percentage of your total consumer appliance business?
60 to 65%.
Sir, this heater business would be what?
The retail business?
Heater, water heater.
That's in the JV company, which is in the bottom floor, which is in the JV company actually.
Fair enough, sir. And sir, in your pipe business...
Mr. Raghatate, I'm sorry to interrupt, sir. I would request you to kindly rejoin the queue for follow-up questions. Thank you. The next question is from the line of Darshil Zaveri from Crown Capital. Please go ahead.
Hi, I hope I'm audible this time.
Yes, sir. Please continue.
So a lot of my questions have been answered. So just wanted to get a broad understanding of the market in the bathware segment right now. We've had a muted year right now, but has the overall market degrown and we have grown? What is the kind of, market story that, we can see play out for FY25?
Yeah, so in my view, and so you're asking me to project the future, so you'll go with my view. In this, I think what has happened in this previous year is that a lot of projects which kind of got held up during COVID and got impacted in the FY22-23 they got completed, so you saw a huge buoyancy in the market, and immediately after this there was a period there were no launches as per the real estate market, and those launches is what was supposed to get fructified in FY24, which got delayed quite a lot. So in my view, we are seeing a lot of launches right now, but for them to really start using our products and actually buying them is actually got delayed. So what I believe is in FY25 we'll see a huge buoyancy in the market. So that's one definite aspect of market demand which is going to happen. The other thing is that if you look at it segment-wise, we've also seen a huge buoyancy also in the upper part of the segment, like in terms of premium, luxury kind of market. While the affordable housing has got impacted because of inflation itself in the market. So there is a bit of a correction which is happening in the overall market structure in terms of what is affordable, what is mid-premium, what is luxury. So this entire change is something which is happening right now, and because of these new launches getting delayed, there will definitely be an upswing in the demand as we go forward. In the short term, you may see some impact because of the general elections, because of our markets are still cash-based markets, and during general election there is generally a reduction in terms of committed expenses around renovation, interiors and everything. But what we believe is that the post-general election, we will see a huge buoyancy in the market coming back, which is very, very evident in terms of the way the real estate market is structured. Additionally, I think from a company perspective, we are extremely committed towards our cost reduction. So we have, like I mentioned in the previous, as an answer to the previous question, we've got nearly 200 basis point improvement in our margins, and we expect that we will take out another 25 odd crores in the coming 2-3 quarters, which will basically coming out of our fixed costs, which is definitely going to boost our bottom lines as we go forward. So honestly, from my perspective, I see an extremely positive market sentiment as we go forward, be it on the top line, be it on the the way the margins are structured right now. I hope I've answered your question.
Yeah, sir. Thank you so much for the detailed answer. That helps a lot, sir. So, even conservatively, we can see growth in the teens for sure. Even if it's maybe a bit lag coming in not coming in quarter one. So, is that a fair assumption that not a perfect then, but teens to mid-teens seems like a fair ballpark?
You're trying. I'm not. I cannot give you a specific number in terms of teens or not teens. We've always maintained we will grow 1.25 times the market. And I believe that over the long term, on a long-term basis, the market has grown. If you look at CAGR of 7-8 years CAGR, market has grown at anywhere between 8 to 10%. So yeah, your numbers could be close to that or even better. In my view, it will be better because we believe we have gained share substantially in the last 3 years. So we believe that our performance will continue to be.
Basically, as the market moves upward, I think there are 2-3 very key levers which should boost our margins. One is definitely this year we have been able to enhance our margins despite a very sluggish growth on the top line. So once we get a boost on the top line, the entire fixed cost structure